So it's been about a month since I set up my Trading 212 account and bought my first stocks. So I thought it'd be a good time to go through kind of the progress of that, how my stocks performed over the month, whether they're up, whether they're down, whether my portfolio as a total is up or down, and my thoughts after about a month of being in the stock market. So if I grab my phone and let's have a look. Okay. So currently I've got £1,660 in my portfolio and invested 1,620. So I am, as it stands, just less than a month in. I'm £40 and 5 pence up, and that's 2.47% of my total portfolio. So if we go ahead and have a look at that portfolio, at the start I was, within a couple of days I was up 3.5%. Then it dipped down to negative minus 13%, and after that I've pretty much been positive all the way. The best performance across the week was on the 30th of April, so that's about halfway through the month. I was up 9.73%. Given that my target, my uppermost part of my target is 10%, that's pretty good. It didn't last long though. Straight back down 3%. 2%. So we're bumming around 4-5% profit until very recently, and then it's dipped down again. The market has been very variable, but currently a month in, I'm 2.47% up. So if we have a look at each individual stock, first stock, American Express, is up 3.61%. That's £9.45. That was my first stock I bought, or one of the first ones I bought. I did a fair bit of research on it. I'm pretty confident. If you are interested in doing a bit more research, first off, the Trading 212 app gives you a fair bit of information. If you click onto the stock and scroll down, it'll give you the company details, which you can expand if you want to. It also gives you, number of employees, and then it goes into the kind of stock market information you want to know. So it's market capitalization, it's PE ratio, it's revenue, EPS, that's earnings per share. Again, these are all very decent. It's at 2.09% dividend yield. So I'm really aiming for a 2% dividend yield. So that's within what I'm looking for. If you go into income statement, you can see that its revenues have been increasing year on year for the past 3 years. I can see that probably dipping in 2020, and also its profits haven't really been sinking, although in 2019 versus its revenue was down. Profit margin 14.98%, pretty good. And then it goes into all the information that you can have a look at if you want to. I would say go and have a look at it on other sites as well that gives you more information, dividend histories, that kind of thing. The next stock was Carnival, which is the cruise ships. Now, I've only put £20 or £15, I believe, into that, and it's currently up 3.55%. That was really just a bit of a gamble. I know that Carnival stock has taken kind of massive hit. I think it's like a 70% drop recently. It's going to be a while before cruise ships come back up again, but given it's so low, I think in 5 years' time you should make a decent profit on that if it doesn't go under in that time period. Next, we're into, again, another travel stock, another gamble stock really, Delta Airlines. So this was doing quite well until Warren Buffett came and said he was no longer invested in the airline industry, and since then it's absolutely tanked. If we go into it, we can see where Warren Buffett did that. If I show you there, I think that's where pretty much where the Warren Buffett announcement was. Ever since then, it has been going down. I invested in that knowing that, airline industries is going to be a pretty bumpy road for the next couple of years. I think Delta are big enough and strong enough to withstand this. They'll probably come out better off in the end, maybe, if a number of smaller competitors go to the wall. I think, again, in 5 years' time, this stock will be up. We can have a look at its recent financial information. As you can see, year on year for the past 3 years, its revenue's been increasing. It's very, very slightly. Its profits, it has a profit margin of 10.14%, which is not bad within the airline industry. I think it's a massive airline with major hubs in the US. It'll be fine, I think, in the long run. So if now we have a look at Diageo. Diageo is a big drinks manufacturer. A lot of the major drinks brands you come across are owned by Diageo. So currently it is up 4.51%. That's £5.92 up. So if you have a look at Diego's financial information, its not got a too high P to E ratio. P to E ratio is price to earnings ratio. I'll probably go and do a video on all the different kind of acronyms and lingo that I've been picking up over the last month. Again, earnings per share 1.26. Okay, dividend yield nearly 2.5, over 2.5, pretty good. Again, if we look at income statement over 3 years, it's been increasing. So that's what I've been looking at really. I don't want to be investing in companies whose revenues and profits have been dropping over the last couple of years. It's not a sign of a very healthy company. So the next stock is another travel stock, EasyJet. We're currently at minus 16.27% on that. Again, I knew it was a gamble when I went in for it. EasyJet have a high proportion of the European low-cost travel market. I think it's about 30%. I think, again, they're going to be in a very rocky road for the next couple of years. In 5 years' time, I do expect that stock to have increased. Let's have a look at the financial information for these ones. P/E ratio 5.73, low-ish, but its stock has dropped a lot. Dividend yield of 8.79%. If we have a look at revenues, again, they've been increasing year on year. Profits, not so much, but it is a very tight market in low-cost European travel. 5.47%, not the worst profit margin you could be looking at. And then if you want to have a look at the other information, you can do. So really, my Delta and EasyJet stocks are by far my worst performing ones. I kind of took them as a bet anyway, but really they currently make up far too much of my portfolio as a very risky bet. So I'm not going to be adding into them for the next couple of months as I build up my EFT portfolio and some of my other stocks. Let's have a look at the next stock, which is Norton LifeLock, currently up 9.42%, so that's £22.77. Norton LifeLock is one of the biggest players in the consumer cybersecurity sector, which I can only see growing. If we have a look at its current market cap, it's 12.2 billion, so pretty big company. P/E ratio 16.51, revenues of 2.49 billion, earnings per share 1.21, dividend yield 2.5%, again in that sweet spot. I can only see this type of stock increasing in the long run. There's only going to be more threats from a cybersecurity standpoint as we go more digital with everything that we do. Then we get on to Royal Dutch Shell, which is currently down 2.56%. That's £2.48 down because I pretty much invested £100 in that. I actually work in the energy industry, so I know a bit about what Shell's been doing recently and buying up tech companies and disruptors in the electricity market and renewables market. So although obviously most of their income is coming from oil and gas currently, they are looking at diversifying, which makes me feel better about investing in this kind of stock. If we have a quick look at the company financials, they're split between the UK and the Netherlands. The Netherlands is where the headquarters are. Little top tip, I've invested in the ticker RDSB. There is an RDSA that is based in the Netherlands. You are going to be charged their withholding tax, which is about 15%. Again, I've done a video on tax, which includes things like withholding tax. If you want to view that, you can do. But if you are investing in the UK, you may as well invest in the, if I remember it, it is RDSB. So if we look at the financial information quickly, P/E ratio of 5, just over 5, EPS of 2.76, dividend yield 10.55. Believe they have cut that dividend. So again, don't always trust the information that is on Trading 212. Go and have a look at it outside. It's not that up to date, I don't think. Profit margin of 4.59%. I can see it picking up in the next couple of years, and I will slowly be investing in it as I do think it's a decent company. Next one on the list is Under Armour. That was my free stock. If you are looking at setting up a Trading 212 account and you want to start off with a free stock up to the value of £100, click the link in the description below and you will get a free stock, and so will I, so it helps me out. My free stock is Under Armour. It's currently at minus 18.33%, so as my kind of current challenge is going, the random stock isn't performing very well. However, it has been up 10% in the last month, so it's been pretty variable if you have a look at it there. But I don't know what's happening to Under Armour, but it's not doing fantastic. It's probably as low as it's been in the total financial crash. I'm not going to go too much into it because it isn't my stock bit, but I had a quick look and its profit margins are 1.75%. If anything hits it, like people reduce their spend because of the coronavirus, they haven't got much room to maneuver with a 1.75% profit margin. But I'm just going to hold on to it as it didn't cost me anything, and I'd like to see how it performs throughout the year. And also any others that I get, if you do click that free link, then I'm going to be doing the same with them. So next up is Unilever, big consumer goods company. If you buy anything at the supermarket, high likelihood it's sold by Unilever. I'm currently up 2.49%, so that's £1.98. If we have a look at the financial information over the last, let's have a look, since 2012, it's pretty much been on an upward trajectory in terms of the stock. PT ratio 17.13, earnings per share 2.44, dividend yield of 3.47. So again, pretty healthy dividend yield. So if I skip down to my last stock that I bought, which is Walt Disney, everyone knows who Walt Disney are. They're currently up 8.73%, so performing pretty well currently. That's £14.47 it's made me in the last month. If we have a quick look at the Walt Disney financial information, massive company, £196 billion market cap, price to earnings ratio of 2.76, earnings per share $5 pretty much, dividend yield has been cut. If you have a look since 2013, it's grown pretty well, especially in recent years. Profit margin of 15.89%, very decent. So those are my individual stocks. I'd like to have about 15 to 20 individual stocks invested in, and the rest is going to be EFTs or exchange traded funds, which I have talked about in the past. So the first EFT is the Vanguard FTSE 100, which tracks the FTSE 100. Now, if you actually click on the information for the EFT, all it really shows you is its performance over the years. If we have a look at it since 2015, the FTSE's been pretty stagnant. It's just traded sideways. Now, that's because it's made up of a lot of older companies that aren't really into the growth phases. They just pay out a lot of dividends. So the dividend yield of the FTSE 100 is pretty good. I think it's about 4 or 5%. Another bit of information is Trading 212 don't really give you any information on the EFTs. If you want to have a look at EFT information, just Google it. Hargreaves Lansdown have good information. The Vanguard website, if you're investing in Vanguard stocks, iShares, just Google it and it'll come up. But it would be good if they did have that information on there. So maybe they'll introduce that in the future, I don't know. My next EFT is the Vanguard S&P 500 EFT, which tracks the S&P 500. Now, someone made a comment on one of my previous videos talking about the Vanguard S&P 500 EFT, that it is the UK based one rather than the American based one. So if you just Google Vanguard S&P 500 EFT, you'll probably see the ticker be VOO, VOO. If you go on to Trading 212 app, it only gives you access to, on the Vanguard one, is VUSA. So that's something to be aware of that isn't exactly the same, but it will track the S&P 500, so it'll do a similar thing. Now, again, the S&P 500 has performed very well. It has been increasing pretty much year on year, even when you take into account financial crashes. When you look at the American market, it's been very strong. So it's definitely not a bad thing to be invested in, although you can never be sure. So my Vanguard S&P 500 EFT is up 4.61%, and that equates to £11.73. And my last one is the Vanguard UK Gilt EFT, and that is a bond EFT. That is currently down 0.25%, and that's minus 26 pence because I pretty much invested £100 into it. Now, that is a bond EFT, so it's really a safer place to put my money. I'm going to try and have a little bit into bonds. You can't invest directly in bonds with the Trading 212 app, so you've got to invest within a EFT that has bonds within it. The Vanguard UK Gilt EFT, again, it invests in gilt bonds, which are pretty much UK government bonds. So my EFTs only make up about 25% of my current portfolio, and I said I really wanted it to be 50%. So over the next couple of months, that is what I'm going to be doing. I'm going to be adding into the current EFTs and maybe one or two more until I get to that 50% ratio, and then I'm going to be investing in my other stocks, either the current ones or adding into a few more. So I get to about 20 stocks in total. I don't want to have more than that just because I'm only doing this part-time. I don't want to have to manage and have a look at too many different things. So 20 is manageable for me. It's up to you how many you would want to invest in. Anyway, that's my current stock portfolio. I hope you found it interesting. Obviously, you can comment on whether you think it's any good. I do know it's currently unbalanced. I will be adding into my EFTs to balance it out, and also not investing in any more travel stocks for the time being, just because that is the riskier side of my portfolio and it makes up about 10% currently, so it's too high. If you do like this, if you want me to make more, please like and subscribe. I'm going to be trying to make one a week, looking at my current portfolio, any stocks that I buy, my thoughts on the Trading 212 app, and anything else that I come across as I make my way into the world of investing. If you've got any comments, leave them below. I will read them all. And if you are looking at using the Trading 212 app, please use the link in the description below. Get yourself that free stock. Anyway, that's me. See you later.